House climate advisor Gina McCarthy says President Biden is looking to invest more than $170 billion.
The president is concerned that China is far ahead of us in the electric vehicle market, and instead of producing the technologies of the future, we're importing them from somewhere else. It is time for that to shift around.
Designer brands. So that was what his main focus was on his platform, you know. And I think when later on, when he got to what he got to now, his main focus became about, you know, basically talking about, you know, black women, because black women is his biggest consumer of his channel, you know. And like I tell people, when you're urban and you're in the urban market on YouTube, like I heard him talk about, you know, the hip hop, but I mean, like, he's urban. So the hip hop, you know, demographics are going to gravitate to him, you know, just because he's new and he's different. You know what I'm saying? You see a dude wearing a suit, candles, central, like the way his mood is on YouTube it's real, it's different. But it's kind of a model-esque of Frankie Crocker. If you know who Frankie Crocker was was a DJ, biggest DJ in New York City on radio, you know what I'm saying, for WBLS. He was a big DJ, popular. Frankie Crocker used to come on, and he used to have women in the hot tub, you know what I'm saying, in the tub. And they would sit there and they would drink champagne, and he would have the studio lit up with candles, you know, and it was he was just a smooth, debonair type of dude. Now, when people talk about Cass, he's a suave, sophisticated brother, you know what I'm saying? He's a dude in his 50s. So he's not a dude that's a hip hop guy. He's a guy that's, you know, into R&B, you know, smooth jazz. You know, you could just tell by the way he dressed and the way he carries himself. He's a dude that's really into, like, you know, sophisticated, smooth stuff. You know, he's a champagne. You could tell he's a champagne wine type of guy, cigar type of guy. You know, he likes to wear suits. He's not a sneaker and jeans dude. He's a shoes dude. He's a shoes, jeans, you know, jean jacket, you know, cashmere sweaters. That's the type of guy he is. So he's a well good dressed dude. He's a smooth, you know, type of dresser and a smooth type of dude. You know what I'm saying? He likes to wear designer glasses. You know what I'm saying? He wears a lot of designer glasses. So, you know, the type of dude he is, he's a high fashion guy. And you gotta respect it. He has a style that's just not for a lot of the dudes. And a lot of the dudes have a disdain for him, is not into the type of fashion he is. Like I said, he's a high fashion brand type of dude. He's a sophisticated type of dude. You know, he reminds me of like the L.A. Reid type of dudes, you know, Kadar Mansonberg, you know, who manages Joe and who discovered D'Angelo. You know, he's like, who else I could put in there? Like, that's a suave dresser. You know, Steve Harvey types. You know, just dudes that just is suave type of dresses. That's just into like dressing, and he's into dressing. You know, he's just into dressing, and so a lot of the cats that don't like him, they just don't like him because they just not, you know, he just don't mesh with the dudes. And I've seen a lot of the dudes that's like street dudes, the street type of dudes. They don't mesh with him, and he's just not their type of cup of tea. You know what I'm saying? And I get it. You know, a lot of dudes in the streets wouldn't, you know, get a Kevin Samuels because he's not cut from their cloth. You know what I'm saying? A dude that get chicks and that get pussy and that got game, he's not going to listen to Kevin Samuels. You know what I'm saying? He's just not going to entertain a Kevin Samuels. Yeah, he might watch it and be entertained, but he's not going to entertain him. And understand it. That's understandable. You know, but a dude that's, you know, a 9-to-5 dude, you know, a dude that's a corporate guy, he may listen to Kevin Samuels. You know, he may support what a Kevin Samuels is talking about. You know, it's a lot of dudes that watch Kevin Samuels that like him. Now you got people that go crazy and fanatics of dude, which I don't think any man should be a fanatic of a man. You know what I'm saying? I think that's a little bit too much. But I do understand why they like him. You know, he's blunt and he's very blunt. You know what I'm saying? He's very blunt and he's like he tells it like it is. And his opinions is the way it is. And I think a lot of people just don't understand him because he's just different. Like I said, a lot of people say, oh, the man gay, the man gay. Like I said, I don't know if he's, you know what I'm saying? I don't know the man's gay because it's none of my business. You know what I'm saying? I think a lot of dudes, you know, he said he was raised by his mother, you know, and I know a lot of dudes that was raised by their single mothers and just raised by women. Those dudes is like very church driven, you know, always been, you know, dressed as fashionable dudes, you know, and always been about education. He's the type of dude that you could just look at. You know, he's raised military. He said he came from a military background family. You know, I got a lot of military people in my family. You know, he was raised by black. He had a black mother. You know, black mothers and black women, and his grandmother, and a lot of people was talking about he was raised by. So his story doesn't, you know, can't, you know. So a lot of dudes just got a lot of hate and a lot of jealousy for the dude because he blew up. He blew up mighty fast. You know, when you blow up as fast as he did, he blew up very fast. I'm not gonna lie, he blew up overnight. You know, he started off. You had 80. I remember he had 80,000 subscribers. Man, turning 80,000 to 100, from 100,000 to 200,000. 200,000, 300,000, 400,000, 500,000. Now he's at 800,000, almost 900,000. So he turned his platform into something big. Now, to talk about Umar, that's how I feel about Umar. I feel like Umar came out left field to go ass son because they in two different, how you say, lanes. Umar is conscious. Kevin Samuels is not on that conscious community type of thing. He's not on that Pan-African wave. Kevin Samuels does his relationship thing. He's not even black. I don't even call him Black Manosphere. He's just doing his thing on the matchmaking, relationship, and then giving advice. Umar doesn't do that. Now, Umar has a lot of flaws with him with the whole school thing. Now, Umar is not a bad person. He's doing something he's trying to help the black community. And I get him. But I also will say that Umar came off hating on dude because it's like you and dude is not in the same lanes, you know. And I felt like Umar was more going at Phil the Avaz show and O'Shea Duke Jackson and Tariq more than Kevin because I never heard Kevin talk about Pan-Africanism. And I never heard him talk about, you know, consciousness at all. I heard somebody say, why you don't talk more like Umar to the women? And like I said, him and Umar is two different. They on two different levels. And they are two different types of people. They're not the same. Kevin Samuels and Umar are not the same. These are two different guys. One guy is a doctor, professor, and he's conscious. The other dude, like I said, he's a corporate guy, image consultant, and he's about basically giving relationship advice. Umar, on the other hand, he's a Republican. He's about opening schools up and talking about black love and black marriages and all that. Okay, understand that. And when I heard him say that Son took his talking points, I don't hear any talking points from Umar. Like I said, Tommy got a great, fight because I've heard some of Tommy's talking points that came out of Kevin's mouth. But Kevin just, how you say, neutralized them better than Tommy, and he was able to basically make them more effective, and it helped him. Whereas Tommy, he quickly faded himself, which is sad. You know, but it is what it is. DJ Envy, Corey Holcomb, and many others that's coming at Kevin. I hear where they're coming from. Son is different. Saying there's a lot of pictures out there of Son, like, they look kind of wild. Saying some of them look, I wouldn't say, look kind of suspect. So, a picture with him was supposed to be like, look like it's 87 or 80, 86, where he got like the shag, Jerry Curl shag going on. He looking like JT Taylor from Kool and the Gang, or something Ready from the World, or Troop. And it's a high school picture of him, and he was supposed to be a cheerleader. That was like the first picture they leaked out, and then they leaked out another picture where he was at looked like he was at a Kappa function. He had his Kappa jacket on, red Kappa jacket, and he had his hair, like how Cisco used to have it. And he was sitting there, and the picture looked, I'll say, kind of, kind of suspectish. But they are trying to basically put that label on that man. I don't know why it is. He is a flamboyant dude. He is a fashionable guy. But I can't just say the man is gay, because it has to be evidence of that. You can't just say somebody's gay and you don't have evidence of that. And they just ran with, oh, he's gay, he's gay, he's gay. And you can't say he's gay, he's gay, he's gay, and you don't have no evidence. No substantial evidence that the man is gay. And that's what he talked about in the platform, but he said they always was calling him gay for years. So he's been dealing with that a long time. People call him gay. And he said he's not gay. And it's crazy. Now, the thing that's crazy about all of this, right? It's really crazy about all of it. Crazy about all of this is that everybody's jumping on this man because they know he's doing good. Now, like I said, I don't agree with everything Kevin Samuel says, because to me, I don't watch him like that. Now, I like Steph is Cold. I like my boy EMS. Like O'Shea. But O'Shea, he doesn't do like how he used to do with the Man on Spirit work. So it's like Steph is Cold and AMS is like my two guys. And Fresh and Fit. I like Fresh and Fit. I like that platform. I like those three platforms. And it's just people that don't understand the Kevin Samuels, they just go at him. Now, I was watching The Breakfast Club, and a chick called and brought up Kevin Samuels' name, saying she was going to give him the donkey of the day. And Envy didn't too care for him, and he said that he was lame and gay. And he said that, he used to see him out in Atlanta, outside the Hermes store, trying to get clients. Now, I've heard that's true. That he was out in Atlanta trying to get clients and basically to help them. Now, the thing with Kevin Samuels, in my opinion, is why a dude like an Envy will say what he said, because a dude like an Envy just don't, you know, he couldn't connect with a Kevin Samuels. And I think a lot of dudes just can't connect with a Kevin Samuels, you know. I think a lot of dudes just wouldn't even know who Kevin Samuels is, you know. For people that maybe watch YouTube, they would know who he is. I asked a lot of people about him. They don't even know who he is. You know what I'm saying? And he's getting big, you know, watching like his clips is like, he even said it on the interview. The clips is what boosts his channel up. You know, these clips with these women. That's what actually boosts his channel up. Without those clips, without those videos, it would have been over. And I think a lot of people just don't understand that Kevin Samuels is just, he's speaking to who his demographic is. His demographic is not the dudes on the streets. His demographic is, he said, the bougie type of dudes, you know, working class type of success dudes. And it's crazy. And I think a lot of times he's been humbling. Like, I was kind of mad with Kevin when he went on a date with the Tommy Lee chick. I was like, I don't know, fucking with that bird. You know what I'm saying? Because I didn't think he should have been even like entertaining that, because she's toxic. But it is what it is. He did what he did. And I think a lot of people just don't like him. And like I said, I understand where Envy was coming from. In Envy opinion, he just don't understand him and don't care to like him. And he had a point what he was saying. You know, to a lot of dudes that get chicks, and dudes that got game, and dudes that's married, they would say, "Oh, this nigga's lame." You know what I'm saying? Because he's not like them. So, it is what it is. You know, and it's crazy. You know, and like the Cynthia G component comes in. She tried to take credit for Kevin Samuels, which is a bunch of hogwash, because she never celebrated that man or his baby. It's like, you know, people just don't understand that. It's like, people don't understand that. It's sad. And that's crazy. You know. Mm. I feel like a lot of people just don't understand where Kevin Samuels is coming from. I feel like people just don't get him because they just waiting for, you know, I always say like a second coming of basically somebody to be a father figure. These women want a father figure, ladies and gentlemen. That's what they want. Women want a father figure. These women want a father figure, and I think Kevin Samuels, get my breakfast. It's like Kevin Samuels is like a father figure, you know. And you can just tell by how they had their conversations that he's like a father figure, you know. He He's like their father figure. So they'll watch him basically to get advice on asking him what they're doing wrong. And when he tells them what they're doing wrong, you have women that, like a Cynthia G, like a Pink Pill, like a Paris Milan, like a Chrissy, will get mad about what the man is saying. But the man is, and Anala says, you can't get mad with what the man is saying. He's talking facts. He's talking to modern day women. And I get it. I get it. Now, me personally, I think some of what he says is kind of harsh. I think he's kind of harsh to some of these women because these women are not kind of like bad women. They're pretty good women, and they're not, skankish women. Because he has some women on there that's good women, but they just want a man that's gonna be there for them. And he comes off real abrasive, but I get it. Like he said, he had parents that, he comes from a military family background and, all that, stuff that he was talking. So I can understand his delivery. It's real abrasive and it's real strict, Comes on a disciplinarian type of way. So I get it. It's like humbling the women, like a father. But I think a lot of these women shouldn't even call in for him because if that's what you're looking for, a father figure, then you need to go look for your father or you need to go get therapy. And I think a lot of these women need therapy, And it's the thing, like with Cynthia G trying to basically gold taking, saying Kevin saying was took talking points from her. Kevin didn't take any talking points from her because nothing he says comes from her. I think she's delusional. I think she was clout chasing. I think she's trying to get her name out there, but nobody's checking for her because you understand, this is a woman that doxed Tariq Nasheed, okay? Because he didn't want to deal with her. So she doxed him with the help of other female black YouTubers that doxed him and almost got this man killed in his household, which I'm going to do a video about that real soon. So with that being said, Kevin is doing what he's supposed to do. Kevin is a businessman. He knows how to work. And like I said, he's the 2.0 of Steve Harvey. He's doing what Steve Harvey did in 2008 with his platform. His platform is like Think Like a Man all over again. You can just hear from the talking points. You can just hear. And I told a lot of people was like, no, he's not going to be another Steve Harvey. He's going to be another Steve Harvey. Just the way it's going, just hearing, he's another Steve Harvey. Steve Harvey, everything that I see Kevin models himself after Steve Harvey. He models himself after Steve Harvey. He don't model himself after nobody else but Steve Harvey. Just watching the whole suit thing, all of that. Steve Harvey used to talk about his suit collection, talk about black men starting to wear suits and all that. Personal tips and all that. So he's not a Black Manosphere dude. He's a dude that basically is an image consultant giving advice to women. And I think a lot of dudes want to hang on to him and say he's one of them, but he's not. He never said he was. He's just a dude that basically is about giving advice to women and growing his platform to the next level. Like he told y'all, it's all business. And that's what it is. So I tell people all the time, man, Kevin Samuels is going to pivot from all of this black space because he's trying to broaden his brand. He's trying to broaden his brand. He's trying to get that talk show. And he may get the talk show, man. He may get the talk show. One of these networks might pick him up. Fox, NBC, CBS, they might pick him up. And he might grow his platform. You never know. So salute. Just keeping it real, and that's all I could do, man. That's all I could do. They people need to just stop hating on the dude and just let the dude do him, man. He ain't doing nothing wrong. Like I said, I don't watch Kevin 24/7, but I watch him sometimes. And his talk points is valid. Something that I don't agree with, and a lot I do agree with. So it is what it is, So y'all have a good morning, man.
CGM Prod. Summer, baby. Enough. 6 we gon' kill in the beat, oh. Killing the beat. We gon' kill in the beat, oh. Killing the beat. Usalaga na mbongwe. Oboya go bumba papa. Usalaga ambiance lelo mwangwe sili. Okolele la nani. Okolele la nani. Bongisa. Allez, sois le colo. Okolele la nani. Usalaga kitoko e. Oboya mabala mama. Omi benga kada shame no pose pe komi. Okolele la nani. Akolie. Okolele la nani. Anunie. Okolele. Allez, sois le colo. Joaninge so bongisa. Curtis Bar. Sois le colo. Bernard Sondongo. Bongisa. Milliardaire. Afro Revo. World de la World. Chris Joachim de Young Boss. Maître Fabrice Fouamba. Trésor lié le aigle noir. Alfredo de Paris. Abedachou. Boss. Ozalaga bozwa to inate. Ozalaga korenye to boyate. Lelo tura inos motema no evimbi. Okolele la nani. Okolele la nani. Junior Chizainga. Okolele la nani. Ozalaga na 6 Oboya go kabola Mogili tura tura fabongo Okolele la nani. Number 1 Chris Bala. Okolele la nani. Nani. Okolele la nani. Kisasa yo makambo baluka. Moto akwe na moto babeteli maboko. Mongo yo zalaga na babi okwe izo sala nini. Nani. Nani. Okolele la nani. Nani. La force fédératrice de la jeunesse, Patrick Katengo, Eric Fourilie, Serge Kisubi, Fidel Lushima FLK, Delika Londa Makilaba champion, Nene Tokole, Angèle Fouamba, Trahi Makaka Messie propre, Mandolina, 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 ya chéri liebo, Ligamba Bogamwa, Manasi baby, Ligamba Bogamwa,
we're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Welcome back to the European Market Open. It is 7:12 here in London, 8:12 in Paris or Berlin, so 50 or so minutes to go until the start of the European trading day, and we will look for some downside at the start of our trading session, despite the fact that the reopening narrative has some further momentum today. And with that in mind, let's head over to France, where COVID restrictions are being somewhat relaxed today. Restaurants and cafes are reopening for outdoor service alongside non-essential shops. The night curfew is also being pushed back to 8 p.m. from 7 p.m. Joining us now is our reporter, Caroline Conan. Oh, Caroline, I feel so much for you. I mean, 7 till 9, it's hardly a great extension, is it? But what exactly is changing today? Some of our visions of Parisian life perhaps coming back to reality.
It's not exactly normal Parisian life again, but for sure it is a step forward. Cafes with outdoor spaces have been open for the past couple hours, so you can enjoy again croissant overlooking the Seine River in Paris. So it is the second phase of the French lockdown easing. Restaurants will serve lunch outside from today, although there will be, of course, COVID restrictions with a 50% capacity, and of course, not all French restaurants have space for outdoor dining. There will be also non-essential shops reopening, and all cultural places such as museums like the Louvre, theaters, cinemas, and stadiums will also reopen with a restricted number of people. Of course, this is only a first step. Further easing will take place in June, and foreign tourists will also be able to enjoy the French art de vivre from June 9 with a health pass, the European pass. And this will, of course, surely help President Macron politically. In fact, there's one recent poll that shows the pandemic legacy will be key for President Macron and the best defense against Marine Le Pen in the upcoming presidential election in 2022. This is why President Macron is putting all his energy in the vaccination campaign, which has been picking up. He has managed to hit his mid-May target of 20 million first doses. That's only 30% of the French, but it's still a first step, and this is according to his plan. And Marine Le Pen, yet, is still high in the polls. Most polls still predict she will be neck and neck with President Macron in the second round of the elections next year.
Caroline, thanks very much. Thanks for the update on what's happening today and the important political context to that. Caroline Conan joining us there in France. We're joined now from Market Perspective by Marcus Morris-Ayton, European Equity Portfolio Manager at Allianz Global Investors. Marcus, good morning to you. So as we watch a little bit of normal life returning in France, just a glimpse of normality perhaps, how much of that is already discounted, do you think, by markets? How much of that has already been factored in? The broad European reopening story, I mean, or is there more to play for there?
Good morning, Anna. It's certainly a very welcome sight seeing life slowly drifting back to normal. And I think that's the key question, and something that we're asking ourselves. Because when you think about economies reopening, the clear beneficiaries are really the travel and leisure stocks and retail. But actually, when you look at how they performed in recent months, these sectors have been very strong, and they're now trading at or close to all-time highs. So perhaps we need to look slightly further afield from that. So a question we've been asking ourselves is actually looking at other economies that have been through this reopening trade to see which trends in the last year or so have persisted after reopening has happened. So we've been looking at markets like Australia and New Zealand, and some of the trends there you see are very strong housing markets, and that's probably no surprise that if we continue to spend more time at home, we want larger houses. DIY has been very strong, as is construction. But actually online sales have stuck at twice the level that they were pre-COVID. And interestingly, actually, New Zealand ran out of champagne. So that gives you an idea of the degree of optimism in these markets when economies begin to reopen.
Good morning, Marcus. I think it's interesting making comparisons to New Zealand, for example, who's been so extreme on their borders that while it's been a domestic reopening, they're very, very far from reopening to the rest of the world, given that they're behind a vaccination program. But I also want to ask, if you think the reopening trade in Europe has kind of largely run its course, do you think that's also the case for European equity outperformance overall? Do you think that European equities can continue to outperform a lot of the rest of the world in the next few months?
I'm relatively bullish on Europe relative to other regions. I think there are questions to be asked as to equities more generally, considering the run we've had in the last 12 months. But when you look at Europe relative to other equity markets, we are certainly in a better spot in terms of economic momentum. Europe is naturally a much more cyclical market that should be positively geared to inflation. So I think that will come through in EPS numbers, where I expect EPS numbers to be slightly stronger in Europe than other markets. And you must also remember that Europe is heavily underowned by most regional investors who have preferred to overweight tech than many of the commodity type sectors that you find in Europe.
How does that, Marcus, the things you said there about Europe being positively geared to inflation, how does that stack up with what we'd seen during the earnings season, where we got these EPS beats, we got earnings coming in better than anticipated and by some margin in some cases, but still some of those stocks sold off because there was a concern that maybe the market had just run ahead of itself. I wonder how does that rub up against an expectation that Europe should do better from the inflation story?
I think that's exactly the point. And the Bulls will drum it up as one of Europe's best ever earnings seasons. But actually, as you rightly say, Anna, the price action during earnings season was certainly very negatively skewed. And that's an indication that investors, particularly on the buy side, were expecting a very strong result season. So companies were being expected to beat and raise guidance, and anything that didn't, unfortunately, suffered quite severely on the day of results. And that's really a debate that we're having, making sure that the fundamentals are in place to continue this strong performance.
Marcus, thanks very much. Stay with us. Marcus Morris-Aiton from Allianz Global Investors. We'll get further thoughts from him shortly. Right now, let's get a Bloomberg First Word News update. For that, here in London is Laura Wright.
Thanks, Anna. Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. He was earlier quoted by the BBC as saying an important announcement could be made today, but later said more time was needed to finalize the agreement. Fighting between Israel and Hamas is continuing. The death toll is now at least 217 people in the Gaza Strip and 12 in Israel. Diplomatic efforts to stop the conflict are also intensifying. Israel's Channel 12 reports that Hamas has agreed to an Egyptian proposal for a ceasefire that would start Thursday morning, but there's been no response yet from Israel. The world's top vaccine maker says it sees export delays until the end of the year. The Serum Institute of India says it's struggling to supply its home country, currently overwhelmed by the pandemic. It hopes to start delivering vaccines to poorer nations through the COVAX scheme by the end of this year. It's a major setback for the nations who are relying on the shots. Global news 24 hours a day on air and at Bloomberg. Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. beneficiaries. This is Bloomberg. Mark, Anna.
Laura, thanks very much. Laura Wright here in London. Coming up on this programme, the European Central Bank publishes its financial stability review this morning, and we will be speaking a little bit later on today to the Central Bank's Vice President, Luis de Guindos. So don't miss that conversation at 12:30 p.m. UK time. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Welcome back to the European Market Open. 40 or so minutes to go until the start of cash equities trading. European futures point to the downside. European car sales surged in April, up 256% from the pandemic low point. Marcus Morris-Ayton from Allianz Global Investors is still with us. And Marcus, how do you assess the supply story on autos right now? I mean, I can tell from just anecdotally from my own experience, there were long waits for electric vehicles, even hybrid vehicles, even before the pandemic, really long waits. And now we're talking about things having deteriorated because of chip shortages and the like. So how do you evaluate the strong data we're seeing, the strong rebound we're seeing, of course, in car sales, but the fact that the supply side is held back?
I think there's two aspects to this. And on the one hand, as you say, new car sales have been very strong, and that's probably a function of consumers with rising disposable incomes after the past year. But also there's a secondary aspect to this, and this stems from the supply side issues that you just mentioned, particularly the semiconductor shortages. And what that's doing is it's really feeding through to the second-hand car market. And so we've been doing a number of channel checks in the used car market. And actually what we're seeing is car sales there are also incredibly strong, but actually prices have been unusually high as well. And that's because of the lack of supply of new cars, as we've just discussed.
You say you're overall bullish European equities relative to the rest of the world, but you provided some reasons to be a little bit worried about how the rest of the world is coping in terms of price action, in terms of the inflation dynamic. In that context, what area of the world are you most worried about? What region's equities?
That's always a difficult question, Mark. And I think we need to be careful of areas that have clearly run very strongly, and where economic momentum, while healthy, may be approaching as good as it gets. And clearly China probably fits that bill. They're slightly earlier than us in terms of their economic recovery. And we may be beginning to see signs there that data has peaked. Whereas in Europe, we're clearly almost a year behind them in terms of coming through COVID, and the corresponding reopening trades that we're beginning to see now in the UK and France, for example.
And Marcus, one of the reasons to like Europe, you mentioned earlier, was it can be geared to an inflation story. How much inflation would you expect to see in Europe? I mean, globally, you've been quite sceptical of the way that some have feared an inflation surge because you say digitalisation, demographics and various other factors are still present. The ones that have weighed prior to coronavirus on inflation are still present.
Yeah, I think that's the key point there, and I'm not hugely surprised that the inflation numbers are ticking up when you consider the supply issues like we just discussed, but also the base effects from last year and the strong economic momentum we've got. But the big debate is whether this is transitory, as I believe it is, or whether we are entering a new regime change where we're likely to be talking about higher inflation for longer. But the challenge for us as investors is really understanding how this impacts corporates and particularly their margin profile. So we're always focused on investing in companies with good pricing power who can pass on those cost pressures to their end clients. And at the moment, many companies have been slightly insulated from this because they're able to make cost savings in other areas of the P&L, like events, like travel, which is perhaps masking the inflation pressures that you're seeing in commodity and freight, for example.
Marcus,
so it's something we've certainly got to be aware of, and I expect
Yeah.
it'll be growing debate in the coming months.
Marcus, thanks very much. Marcus Morris-Ayton joining us from Allianz Global Investors. Thanks for being part of the programme this morning. Coming up, we'll talk about M&A in the media space. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. Half an hour to go until the start of cash equities trading, and it looks as if it could be heavy going for bulls this morning. European equity market futures point to the downside. A little bit of catch-up to play with the US and the tech sell-off in particular in the US yesterday. So, Mark, 30 minutes to go until the start of the European equity trading session. It seemed that the dollar was quite key to what was happening in yesterday's session. Today, a little bit flatter. We talked many times about the reasons to be bearish the dollar. Are you still of that view? Do you still hear that coming from markets as well?
Yeah, we're at an absolutely critical level right now. We're within 0.5% of the 6-year low. We got down here in January. We got down here yesterday. We have not yet broken through it. Now, the backdrop reasons to be bearish the dollar do remain valid indeed, Anna. The idea that a central bank is saying, look, we're going to keep interest rates super low even as inflation is coming through. We want to generate inflation. We want to devalue that currency. That's what they're trying to do. They're basically trying to erode the real value of your dollars and create inflation out of there. The central bank is completely committed to it. They're deeply negative real yields. 10-year real yields in the US are about minus 0.9%. This is a very, very bearish backdrop for the dollar. But it's slightly strange out there. If you asked me on any other day, ignoring the macro drivers, if you said it's a day where equities are down, crypto is down, commodities are down, and US yields are a tick higher, what's happened to the dollar? I would say the dollar's bounced 1%. It must be a deleveraging environment. It must be a risk-averse environment. And now that's where we're stuck in some kind of conundrum where the dollar is suddenly frozen just above this key technical level. So it's either ripe to suddenly, mess with all the shorts again and stop out all those shorts and have another painful stop-loss run in the short term, or this could be the thing that turns the sentiment if it really breaks the level of the downside. So I'd say for the next 24 hours or so, dollar is one of the key assets to watch.
Okay, yeah, so something of a surprise to not see it bouncing a little bit more in conjunction with all the other asset moves we've talked about this morning. Mark, let's put the macro story to one side for a moment and turn to a corporate story, and specifically within the media industry. The race for content is on, with lots of deals in the making. The publisher Future has recently acquired the US edition of Marie Claire magazine, accelerating its push into North America. The specialist interest media company owns over 220 brands, with the firm becoming a force in e-commerce. Future reported first half profits that beat expectations and says full year results will be materially ahead of estimates. Let's speak now to Zilla Bing-Thorne, Future's CEO. Zilla, good to speak to you. Thanks for talking to us here on the European Market Open. And I want to start with this outlook statement. Full year results to be materially ahead of estimates. What's going so right then? What's driving this upgrade to expectations?
Hi, yeah, great to speak to you. I think the real underpinning of the upgrade and the expectations has been our consistent track record. We continue to write content that really meets the needs of our audiences, and we've seen that consistently over the last few years, with our audience on organic CAGR up 19% over the last 5 years. And by meeting the needs of the audiences and making sure we give them really trusted content, then we're able to make sure that we can monetize that effectively. And that's what's really driving through the strong upgrade that we're delivering to the market.
Good morning, Zilla. You now have a very diverse and impressive portfolio of media assets, but now that third-party cookies are being cut off in collection, how are you planning to kind of use first-party cookies, and how are you planning to gather them and implement that use?
Hi, Mark. That's a great question. One of the things about our business that makes us slightly different from the general media businesses is that we operate in specialist media. And what that means is we have really high intent. We know a lot about our audiences, and we know that they're highly valuable to advertisers. And so we're really well placed for the changes with the privacy regimes coming through, because we have the audiences that the advertisers want to reach. And you can see that really clearly in this half's results, where we saw advertising yields increase significantly over this time last year, with overall organic digital advertising growing 30%, because we were a place that partners went to where they could trust to meet the audiences they needed.
Zilla, you've been shifting your business, shifting from a specialist journalism outlet to more digital advertising and e-commerce. I wonder if you could tell us a little bit about how far through that journey you think you are and what the end point is.
Yeah, sure. So I always think it's never done. The day it's done, I think, is the day we should probably all go home. I think the recent acquisitions of the last 12 months of Marie Claire in the US just a few weeks ago, and then also TI Media 12 months ago, highlights our ambitions. Today, we reach 1 in 3 people online in the US, and I'd very much like over the next few years to see that move up to more like 1 in 2 online. And the acquisition of those brands allows us to move more into the women's lifestyle verticals, home improvements and renovations, and also across a more country lifestyle type market, which is very much zeitgeist right now in terms of what's going on.
I want to ask about one of your other acquisitions, Go Compare, where obviously you have a history there. What's your plans for the integration of that company and how you plan to kind of expand its reach?
So we've been absolutely delighted with that acquisition. We're literally at day 90, and I'm very pleased to say that the integration's almost complete, with us already got the new operating models in place, everyone's in their new jobs, and we're well progressed with the systems integrations. We're also announcing today that we've actually uplifted our synergy targets from £10 million to £15 million because we've pretty much completed the work on the organisational design. So we're very confident about our ability to uplift that number. However, everyone knows we didn't buy the business to deliver cost saving. We bought the business because we believed there was a real opportunity for Future's content specialism coupled with Go Compare's customer care to actually help people make the decisions that matter to them in their lives through the combination of best price, but also best advice. And we've made really good progress in that over the last 90 days, including, for example, improving the SEO rankings in Go Compare from historically around 3.5 in Google search to consistently #1 over the last few weeks.
To my earlier point, Zilla, about the transformation of this business then, what does Go Compare, the acquisition of Go Compare, tell us about where revenues will come from in the future? Because this is, you know, more of a move away from the specialist journalist background into the e-commerce arena.
Yeah, I think we've been really clear with our shareholders that what we're interested in is creating material diversified revenue streams, and that's been the consistent execution over the last 5 years. And so what we see with the acquisition of Go Compare is us taking our expertise, which is writing content that makes connections and that helps people make buying decisions, and then adding in services. So rather than just helping you decide what laptop to buy, we're now helping you decide what's the best home insurance. And I think we would expect to continue to see similar executions we've seen over the last 5 years, where sometimes we'll be looking to expand into print magazines where we can take those assets online. And sometimes we'll be looking to bring in new functionality where we can create a new revenue stream with our existing audiences, which is what the Go Compare business has done for us.
You've employed a number of interesting techniques to reorient your employees towards the US audience to some extent. How far have you gone towards identifying some new low-cost base for a US office?
Yeah, it's a great question. About 20% of our workforce just now are actually based in the US, largely New York and Washington. However, because we write to specialist audiences, so people's passions, what we're not doing is creating content for a geography. We're creating content to actually meet your needs, which means we don't believe we have to be in market to create that audience growth. In fact, one of our second largest site, Games Radar, 75% of the staff on that site are based in the UK, and yet over 65% of the audience is in the US, and likewise the monetization. So what we think really matters is that we create content that makes the connection, not where people are based.
Zilla, good to speak to you. Thanks very much for talking to us. Zilla Bing-Thorne, the Future CEO. Thanks for bringing us the story behind the business on this day where earnings expectations upgraded by the business, seeing full-year results materially ahead of estimates. Let's get a Bloomberg Business Flash for a look at some of the other corporate stories we're covering this morning. Here's Laura.
Thanks, Anna. UBS has started a broad round of job cuts across its largest divisions. The reductions are part of a restructuring plan intended to save the bank $1 billion over the next 3 years. Bloomberg understands they will be spread across the investment bank, wealth management unit and Swiss business, with all levels of seniority affected. As many as 700 positions could go in Switzerland alone. Robinhood plans to reveal its filing for going public as soon as next week. Bloomberg sources tell us the trading up is targeting late June for its market debut. The filing will give potential investors their first comprehensive look at the firm's financials. Robinhood declined to comment. A reshuffle at the upper echelons of JP Morgan is reigniting the debate over who could succeed Wall Street titan Jamie Dimon. The new shakeup puts two women at front and center, Marianne Lake and Jennifer Piepszak. They've been named co-heads of JP Morgan's massive consumer and community banking business. That's the Bloomberg Business Flash. Mark, Anna.
Laura, thanks very much. Laura Wright here in London. Coming up on this programme then, Bitcoin tumbles below $40,000 for the first time since February as China reiterates its ban on the use of cryptos in transactions. More on that next. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
The valuations clearly are at very high percentiles relative to history. The only valuations that are not are things like equity risk premium and so on that key off of inflation and interest rates. And as you've done such a great job discussing the fact that inflation and interest rates are on the way up, I think we have to recognize that returns overall in the U.S. equity market from this point will be very modest and perhaps volatile compared to what we've enjoyed, especially over the last 12 to 15 months.
Goldman's Abby Joseph Cohen there on what she sees as a more volatile period for US stocks. And interesting, Mark, to hear her talking there about valuations, because it's concern perhaps around valuations in tech stocks that means that people draw this link between inflation and selling stocks quite so starkly. We saw that a little bit yesterday. When people are worried about inflation, we start to sell those tech stocks because they're worried about the valuations having gone too far.
I completely agree with Abby Joseph Cohen here. Look, when you look at all the eras in history for when producer prices or commodities have surged this much, it has been a bad environment for stocks over the next 1 month, 3 months, 6 months, 1 year, and it's been volatile. There's only really been 12 incidents like this going back in the last 60 years, and the average returns in all those periods is negative. Only one time in all those 60 years did we see commodities surge like this and equities not fall over those 4 times spans, and it just had a 3.3% return over 1 year, and it was very volatile. So we expect extreme volatility. The valuation angle is just why you should be even more worried. Even without those valuations, it was set to be a tough year for equities ahead. With those valuations, it could be really, really scary.
Okay, interesting stuff. Thanks, Mark. Let's focus in on some of the things that are coming up later on today. The ECB announces the results of its latest financial stability review. Investors are watching for signals on bank reserves and hedge fund exposure. The press conference is set to start at 9 a.m. UK time. Moving over to the US, it's a big day for retail earnings. We've heard from the retail sector a little already this morning. We'll get more on that in the next hour of our programme. But today we'll hear from Target, Lowe's and TJX. They will report results before the US market open. At 7 p.m. London time, the Fed will publish minutes from its April meeting. So a big focus there on everything they have to say about inflation or perhaps unemployment. And finally, New York City reopens. Capacity restrictions on restaurants, theatres, stores and museums will end today. On to something else making headlines this morning. Bitcoin has extended a slump and is trading below $40,000, the lowest level since February. It follows a warning from China's central bank that cryptos cannot be used as a form of payment. Interesting. Let's get to Bloomberg's Joanna Ossinger, who's with us now. And Joanna, good morning. So what is Bitcoin looking like today? I want to ask you about key levels. I seem to be reading a lot about key levels or the technicals around Bitcoin. Is that what's dominating the conversation at the moment?
That's part of it. And what's really in focus right now is the 40,000 level. Bitcoin has dipped to under 39,000, but 40,000 is key, and the 200-day moving average, which sits right below it. So those two things are really important. Can it get above that by the end of the day? Can it get above that in the next few days? Otherwise, it could continue the downward momentum.
The announcement that Tesla had invested in Bitcoin in February kind of launched the last phase of massive gains. I think we went up another kind of 60 or 70% since then. But now we've erased a lot of those gains. How has Tesla done its investment, and what's kind of been the history of that process since then?
Yeah, well, it's been really interesting, Mark, because you had just a huge jump. You had a jump of about $5,000 from, say, the mid-38s to 44,000 and up, when Tesla said that it had invested $1.5 billion in Bitcoin and was likely to start taking it as a payment. And that fueled this whole thing about how other corporations might come in, about institutions really starting to come in. And so, yeah, it went up to almost $65,000 by mid-April. And Musk alone probably hasn't done it. There were concerns about momentum. JP Morgan said once it dropped below 60,000 that it was likely to continue downward, and other people said the technicals didn't look that great, but it has really started to lose that momentum. And then this thing from China, where the PBOC actually just put on its WeChat account a statement from the industry that actually reiterates mostly things that were said in 2017, but it's just a reminder that China is looking at this stuff and they don't want people to speculate too much.
Yeah, they don't want people to speculate too much. I was interested to read in your piece this morning that I'd thought that a lot of mining still happens in China, a lot of Bitcoin mining, but your piece pointing out that a lot of that has moved. Yes. And in terms of the conversation around crypto in China, I've been reading quite a lot about the digital yuan plans that the PBOC has and GovCoin plans that other central banks have. How much do we think that is weighing into what the PBOC is saying here?
It's definitely a part of it. They are looking at using the digital yuan in future, but at the same time, there have been people saying maybe cryptocurrencies can kind of exist alongside the digital yuan, but this is a reminder that China is watching this stuff, and they do periodically come along with these warnings, so this is not too unusual, but China is definitely a big area still for mining and for investment. So it definitely affects the global crypto operation.
Joanna, thanks very much for the update. So Bloomberg's Joanna Ossinger giving us yet another update on the news flow surrounding Bitcoin and the crypto universe. There seems to be plenty of it in the last couple of weeks or so. Let's get a Bloomberg First Word News update. Some of our top stories this morning. Here's Laura.
Thanks, Anna. Today, France is easing more of its lockdown restrictions. One of the most anticipated measures is the reopening of terraces for cafes and restaurants. Non-essential shops will also be allowed a limited number of customers. France's vaccinations are picking up, and it's now given around 30 million shots. President Biden is planning a 2-week delay for a ban on new investments in certain Chinese companies. Sources tell Bloomberg that officials are drafting guidance to clarify the Trump-era policy that confused Wall Street. The main question mark is over how the China investment ban applies to subsidiaries. In the UK, Prime Minister Boris Johnson is fleshing out his plans to level up the UK. He wants to spend £830 million on transforming local town centres. He also plans to shift 3,000 civil servant jobs out of London by 2025, including to Edinburgh and Belfast. Johnson says he wants to seize the opportunity to build back better from the pandemic. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Mark, Anna.
Laura, thanks very much. Laura Wright here in London. Now, coming up on this programme, we'll look at the stocks that we're watching, including Julius Baer's. The lender's profitability gains despite warning of a slowdown. More on that next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to the European Market Open. 7:52 in London, 8:52 in Paris or Berlin. European equity market futures point to the downside. US equity futures also weaker, down around 0.4% after losses yesterday on Nasdaq futures. Let's get to the stocks we're watching this morning. Danny Berger joins us, and she starts. You start. Good morning, Danny, with Julius Baer.
Good morning, Anna. Yeah, Julius Baer called higher this morning, reporting earnings and some pretty solid growth when it comes to client assets, doing better on costs, on margins as well. Jeffrey's saying that, look, market expectations were really high when it came to Julius Baer, but still they had an exceptionally strong performance, and this progress on costs and capital, they say, is here to stay. The other sector to look out for is going to be autos. We had that big jump in European auto registry, more than tripling in April. Of course, this comes from a very low base, and one of the things to keep in mind is it's still 14% below the industry average for the months before the pandemic. And it does seem like concern has shifted from this demand picture, of course, to the supply with the production shortage in semiconductors. Finally, KKR, a little bit of deal news here, buying London-listed John Lang. So this is an infrastructure portfolio. So this helps KKR sort of beef up that segment. They are based in the UK, but they have projects throughout the developed world. So KKR is going to be offering 403 pence per share, and that's about an 11.5% increase from its close yesterday.
Danny, thanks very much. Danny Berger with a range of sectors and stocks we need to keep in focus as we get towards the start of the European trading session. And Mark, with all of that in mind, it's interesting to think about what the read across is from weaker cryptocurrency markets into other assets. How much do we know about that read across right now? Because we certainly see some negativity on cryptos, whether it's Bitcoin or Ethereum.
Yeah, it's a brilliant question, mainly because I don't have the precise answer. First of all, look, higher volatility in any asset is not great because it increases VAR. It means people have to deleverage in other assets. So that's a slight negative. There's probably at some point, and it's a binary level, where crypto losses feed through to major risk aversion. And that's because this is a trade that's very invested by the retail audience. That retail audience also own a lot of stocks now. We know that's one of the big themes the last year, that they actually now own a material part of the stock market. So when they suffer enough losses on crypto, not only might they trim their holdings across equity markets, particularly tech, you think is most sensitive, but also they're going to be less inclined to buy the dip. The final thing of why it might be a negative is that we know that more and more companies have invested on crypto. Now, it's only a smaller part of their business, but it's certainly a real negative blow that they seem to have all suddenly sponsored the idea of buying into crypto near the all-time records. So that's another real negative. So there is a certain point where this could really spiral negatively. I just don't know where that point is.
Right, so it could increase that value of risk, the VAR that you mentioned there, and cause some deleveraging elsewhere. Interesting to note also the weakness we're seeing in some commodity markets this morning. Steel prices weaker, iron ore down another 4%, Mark. And also interesting to note the lack of movement in the dollar, something that, Mark, you drew our attention to earlier on in the programme. Thanks to Mark for spending the past hour with us. I'll be back with the market open next. Futures are pointing to the downside. US futures also point modestly lower. The European Open is next. This is Bloomberg. Welcome back to the European Market Open. A minute to go until the start of cash equities trading for this Wednesday morning. Here are your headlines. Stocks slide amid inflation concerns as attention shifts to today's Fed minutes. Bitcoin follows the downward trend after a fresh warning from the PBOC. France gets back to business with non-essential stores and entertainment venues opening for the first time in over 6 weeks. And a leadership shake-up at JP Morgan puts 2 women in a key role and pole position to eventually succeed Jamie Dimon. Good morning, everybody. Let's have a look at your futures then. We've been saying all morning that we have some catching up to do with the United States. US equity markets took a turn for the worse. Despite some decent reporting from the retail sector, the focus turned to inflation later on in the session, and that hurt tech names. And as a result, we saw the Nasdaq trading to the downside during the session yesterday, certainly in the latter part of it. And we have some catch-up to play here on European equity markets this morning. So you can see those numbers just coming into view, I think, just coming into focus, perhaps. The Euro Stoxx 50 futures to the downside. Let's think about where we are then on European equity markets, just opening up or opening down by 0.3% on the FTSE 100. That is the first out of the blocks this morning. We're slightly thinner on the ground in terms of corporate reporting, but there are some individual names we're watching. Also individual sectors to keep an eye on. The auto sector is one of those. So waiting for the DAX to open over in Germany, thinking about what we might see on the German market, given the auto names and the performance, the uptick that we've seen from the auto sector in terms of new car registrations in the month of April. A really strong surge, more than 200% to the upside, but that, of course, coming from an incredibly low base. The CAC 40 opens down by 1%. The FTSE 100 is now down by just over 1%. So these are some quite substantial losses coming through here. I do wonder how much read across we are getting from the selling that we're seeing in cryptocurrencies. That read across not fully understood, perhaps, as we were just discussing with our colleague Mark Cudmore in the last hour of the programme. But with Bitcoin down by more than 9% just today, Ethereum down by nearly 14%. You wonder if there's any read across in terms of the risk-taking from one sector to another, or one asset class to another. So European equity markets opening on the back foot this morning. Stocks in Asia have declined with the US and with US futures as concern about faster inflation overshadows the economic recovery from the pandemic. Joining us now is Paul Brain, Newton Investment Management Head of Fixed Income. Paul, good morning to you. I wonder what context you would give to these drops of more than 1% on European equity markets today. Clearly, we're catching up with the US, where we seem to be gripped later in the day with concerns around inflation. But those inflation concerns are not new. Is it UK inflation data just sort of underlining the point? Is it virus concerns? I mean, what do you think is driving this selling in this morning's session?
Yeah, it's a mixed bag, as you said. I think there are a number of factors that perhaps are coming through to the market in a delayed reaction. Certainly inflation has got to be a concern because, of course, central banks eventually will react to it. I think it's too soon, perhaps, to panic about that. But you can see some of the concerns coming through from some central banks talking about perhaps tapering earlier than the market thought. We see that a little bit in the UK, of course, recently, of course, perhaps in Canada coming up soon. And I think that's a bit that worries the equity market. Essentially, of course, higher inflation getting out of control should worry the equity market. But inflation that is a temporary spike shouldn't be too much of a concern. So maybe it's just a delayed reaction to those inflation numbers that keep on cropping up. They're not going away. They still seem to be there in the background.
Yes, sorry to interrupt, Paul. In terms of inflation then and expectations of it, you suggest it could go higher, or inflation expectations could go higher, and you've been buying tips and you've been in US inflation-linked securities, European inflation-linked securities, with a view to protecting yourself on that front. What is the strategy then around inflation at this point?
Well, it's building in the idea that we've got a temporary spike in inflation coming through for a variety of reasons. But longer term, we've got a pickup in inflation that we think is going to be a bit more sticky. So once you get past the summer spike in inflation, we drop back to a level that is higher than where we started. And that, I think, suggests that there's some inflation protection is warranted. Some markets, such as the US, are starting to perhaps price in a little bit too much. And actually, we're feeling they're a bit rich and are starting to take profits there. But other inflation markets around the world, you mentioned Europe, but also in places such as Australia, New Zealand and Canada, still to us seem to reflect an opportunity to use some inflation protection.
In thinking about the way the market prices in that inflation, Paul, I'm looking at the US 10-year yield, 1.65%. We do seem to be edging a little higher. For context, of course, we went up to, 1.7 around that CPI number, that surprisingly strong CPI number of last week. We fell back from that, given reassurance from the Fed, and now we seem to be edging our way up there. How high do you think we go on 10-year yields, and how quickly, I suppose, is also part of that conversation?
Well, the long-term background is that for the next 2 to 3 years, we're going to have yields that are around about inflation. So in other words, you're not going to get paid too much in a real yield context from owning government bonds. Because, of course, you've got a lot of financing of debt that's been accumulated, being built through the pandemic. So we think that's the backdrop. We do believe that inflation in the US is going to be above 2% consistently after the spike, and therefore we'd expect Treasury yields to be 2% plus, but not too far as we move towards the end of the year. I suppose the surprising thing is that if the bond market's been fairly well controlled through since the CPI number. It's not actually been, we haven't seen a big significant rise in yields. And I would put that down more to the fact the market sold off so aggressively in the first quarter, and positions have changed so dramatically that few investors are long at the moment. So I think, yeah, 2% plus is the number.
Okay, 2% plus. And I'm looking for explanations as to why we're seeing this negativity for risk assets today. We don't see a big move in the dollar. US 10-year yield is a little firmer, so 1.65% as we discussed. US stocks, of course, sold off, tech stocks in the latter part of the session yesterday. But I also keep wondering about the read across from crypto moves. They do seem to be, even if many institutional investors sit on the sidelines, certainly they have been a favorite of retail investors, and retail investors have exposure elsewhere. And so when you see something like Ethereum down 14.6% or Bitcoin down just over 9%. Does it make you think about read across into other assets, or does that fallout manage to stay contained from your perspective, Paul?
Well, it's such a difficult one to read. I wouldn't say I'm an expert on cryptocurrencies, and I think there are a few people out there who are. But essentially, of course, we had a perfect storm for cryptocurrencies in that's the first quarter with a lot of institutions buying. The technical situation was pretty attractive. And maybe we're seeing the fallout from that. It was broadening, wasn't it, a couple of weeks ago to a lot of other cryptocurrencies away from just Bitcoin. And I think perhaps that's coming to an end. Maybe there's some profit taking. Maybe there's a bit of panic building in. But yeah, the connection between the cryptocurrencies and risk assets seems to be pretty strong at the moment.
Paul, thanks very much for staying with us. Paul Brain, Newton Investment Management Head of Fixed Income. More from him shortly. Coming up on the programme then, restrictions ease in France with the reopening of restaurants and cafes, certainly those with outside space. We'll bring you all the details next. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
Welcome back to the European Market Open. Just coming up to 10 minutes into our trading session, European equity markets down by more than 1% in all of these cases, in all of the major markets. The FTSE 100 basic material stocks certainly moving to the downside, and that's that index then down by 1.1%, but it's in good company. The DAX and the CAC both down by more than 1% as well. Let's get some of the individual stocks on the move. There are some idiosyncratic stories managing to cut through this morning. With some of the details, here's Bloomberg's Danny Berger.
Anna, yeah, definitely hard to find those stories, though. 570 plus stocks are down out of the stock 600 this morning. So the breath is not really there to the upside at all. But InPost is moving higher. It's one of the stories standing out. Reporting earnings, upgrading its guidance. Analysts saying that it was a weaker than expected first quarter, but that guidance upgrade really is helping shares today because it had performed so poorly over the past few weeks. Also, some analyst action around Commerce Bank, Citi to be specific, looking at the stock, saying that it's already fully valued. So not necessarily anything bad Commerce Bank has done, but just said, look, the upside is priced in. And it looks like equity markets agreeing. Commerce Bank almost down 2%. Finally, the miners, the material sector, all of those falling pretty heavily today as commodities also fall. Copper's down, iron ore is down, so Antofagasta down 3.3%. Now, let's look at the whole macro picture here because, again, it is a lot of weakness. We're seeing the dollar just about pinned to its lowest level in a few months. It's barely moving at the moment. It's those real rates keeping the dollar down. We're actually getting a bid to gold so far this morning. This is something we haven't really seen in a while, just under $1,900. And as that is getting a bid, Bitcoin continues to sell off, still under $40,000, Anna.
Thanks very much. Thanks for the update, Danny. Danny Berger with a heads up on some of the things happening in the macro universe and indeed those individual corporate stories. Let's get to something that is quite uplifting to report, in fact, and that is over in France, where COVID restrictions are being relaxed just a little bit further today. Restaurants and cafes are reopening for outdoor service alongside non-essential shops. The night curfew is also being pushed back to 9 p.m. from 7 p.m. Joining us now is our reporter, Caroline Conan. Slowly, glimpses of normal life returning to France. Not entirely normal, yes, of course, but what exactly is changing today? Good morning, Caroline.
Good morning. Not entirely normal, but even President Macron actually wants to encourage people to dine outside and have the coffees outside again. He is having a coffee himself on a terrace in Paris with the Prime Minister Jean Castex as we speak. He called the French to enjoy the moment today, but remain cautious. At the moment, the mask is still has to be worn outside, especially when you're next to people. But social distancing will have to be respected. The restaurants will only have a 50% capacity, and there will still be a 9 p.m. curfew. It is a first step, though. Non-essential shops will also reopen, which will make a lot of difference for those who haven't been able to shop for months. And cultural events will restart with museums such as the Louvre reopening today, theaters and cinemas. The next step will be in June. By the end of June in France, most restrictions will have been lifted. This will have an economic impact, of course, and also a political impact. The French economy is expected to rebound at least 5.5% this year, and President Macron is betting on the pandemic legacy and the acceleration of the vaccination campaign to go up in the polls. The latest polls have all shown that he would be neck and neck with the far right-wing leader Marine Le Pen in the second round of the presidential elections next year.
Caroline, thank you very much. Caroline Conan with details of what is changing in France today. A little bit of pre-COVID life returning, perhaps, and of course some important politics to think about around that. Let's get back to Paul Brain, Newton Investment Management Head of Fixed Income. He's still with us. And Paul, the reopening agenda across Europe does seem to be gaining a little momentum. That's the story coming out of France. Yesterday we were talking about some of the restrictions in Italy being lifted. I wonder whether this is changing your thinking about the time horizons adopted by the ECB, or is this just steady as she goes with the PEP programme? No need to change it. It's a little early for that just now.
Well, I think it's important consideration because, of course, at the height of the lockdowns earlier in the year, the ECB accelerated their PP program. So the speculation is that acceleration will be pulled back at some point. It may be a little bit too soon to do that because, of course, economies are only just opening up. But I would expect to see that extra amount being taken back out again over the next, say, couple of months. And I think that's what's affecting the bond. The bond markets in Europe have been selling off in anticipation of that. They may have gone a little bit too far because essentially that program's not going to go away. It's just going to be reduced a little bit on a monthly basis. So I think QE is still there, but essentially it's not going to go away.
Yeah, that's interesting, and takes me on to some of the market moves we're seeing this morning, Paul. In the German market, German two-year yields rising to minus 0.64%. So we're still very negative. We are seeing, though, as you say, a little bit of selling in bond markets in Europe in anticipation of that ECB move, and some of those yields coming a little bit closer back towards the zero line. Are we going to be really talking about positive yields across Europe anytime soon? I mean, what kind of time horizon do we have for that? This is something that was pre-pandemic, of course, so not just it might take more than just the pandemic to go away for that to happen.
Well, I think the combination of the pandemic perhaps going away, or the vaccine program accelerating, opening up, I think that combination with the higher inflation expectations and perhaps less QE gives you a positive yield in many places in Europe. Not excessively so, because, of course, we still have a fairly weak economic outlook to overcome, and we have a lot of debt to service as well. So I think that ECB involvement tends to distort things quite dramatically. So in the 10-year space, I'd expect to see some positive yields in Germany within the next couple of months.
And we've talked about the ECB and your expectations there, Paul. We are, of course, going to hear from the Fed a little bit later on today. Of course, we're focused on inflation, but every time the Fed is asked about inflation, there is a temptation, it seems, for them to underline the importance of unemployment data as well. And we only have to look back to the last unemployment report to see where the weakness still lies in the US economy. Complex reasons for that. What are you looking for then from the Fed minutes around that theme?
I think a continuation of the trend, and essentially they will talk about unemployment, or employment is their main goal. They keep reinforcing that. And the unemployment numbers of last week were fairly ambiguous. It's unclear as to how quickly that recovery comes through. So for the next 2 to 3 months, I think they will continue to talk about that employment problem and the fact that the recovery is not really fed through to sort that out. Now, if that starts to happen between now and, let's say, the third quarter, then I think the rhetoric, the conversation will change by the Fed, and they'll start talking about perhaps QE being tapered as we move into next year.
Paul, thanks very much. Thanks for your time. Have a good week. Paul Brain, Newton Investment Management, Head of Fixed Income. Paul will be continuing his conversation with us, in fact, on Bloomberg Radio. That is at 9 a.m. UK time. Coming up, we'll talk about the banking sector. Shake up at JP Morgan. 2 women come to the front as likely contenders for Diamond's throne following the management shuffle. But is Diamond going anywhere right now? All the details next. This is Bloomberg.
you ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European Market Open. 21 minutes into a negative session for European equity markets, but actually substantially off lows. We were down by more than 1% at the start of the trading day, and now just paring those losses a little. Let's get to some of the top corporate news flow we're covering this morning. Here with the Bloomberg Business Flash is Laura Wright.
Thanks, Anna. Lead times for semiconductors increased to 17 weeks in April. According to recent research, the gap between ordering a chip and taking delivery is now at its longest since the firm began tracking the data in 2017. The company describes the wait time as in the danger zone. Robinhood plans to reveal its file before going public as soon as next week. Bloomberg sources tell us the trading up is targeting late June for its market debut. The filing will give potential investors their first comprehensive look at the firm's financials. Robinhood declined to comment. UBS has started a broad round of job cuts across its largest divisions. The reductions are part of a restructuring plan intended to save the bank $1 billion over the next 3 years. Bloomberg understands they will be spread across the investment bank, wealth management unit and Swiss business, with all levels of seniority affected. As many as 700 positions could go in Switzerland alone. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now, sticking with the banking sector, two women are moving ahead of the pack in the race to succeed Jamie Dimon at the helm of JP Morgan. Marianne Lake and Jennifer Piepzak are seen as strong contenders following yesterday's leadership overhaul. The bank named them co-heads of its giant consumer and community banking division. So what does the future hold in store for the bank and for these two executives? Let's talk now to Bloomberg's Asia Finance reporter, Nabila Ahmed, who's in Sydney for us. Nabila, good to speak to you. Thanks for joining us here on the European Market Open. So what do we know about these two women?
So on the one hand, we've got Marianne Lake, a long-time former CFO of the bank, and also someone who's been seen as a potential successor for many years. She got a crack at running a major business line in 2019. She was put in charge of the consumer lending business at JP Morgan, which generates about a fourth of the company's revenue. She's 51 years of age, and she's been at JP Morgan for 22 years. On the other hand, you have Jennifer Piepzak, also 51, and she's been at the bank for about 27 years. She rose through the ranks of the investment bank there and succeeded Lake as the CFO a couple of years ago. So these two women are very strong contenders indeed.
So two with the CFO experience, which is also interesting. How long do we expect Jamie Dimon to hang around? Because this conversation is all suggesting that one of them will take over from him, but I don't think he said he's going anywhere just yet.
You know, that is exactly the thing that everybody's waiting to hear. What will Jamie Dimon actually do? And he has had this stock answer for a number of years when you ask him this question, and he says, well, another 5 years. And he's been saying that for a while. The difference, I guess, this time is that, you know, even though the bank does want him to stick around and the board has said that he won't be leaving for a significant amount of time, and obviously he's a rock star CEO. He has made, under his watch, JP Morgan shares have quadrupled. He's the only bank CEO still around from the credit crisis, which he navigated really well for JP Morgan. And he is the longest serving bank CEO on Wall Street. So in many ways, he is Mr. Wall Street. He is 65, though, and so perhaps some people think that this time around maybe it will really be 5 years from now.
He is Mr. Wall Street, you say, Nabila, and so this is significant on Wall Street, isn't it? I mean, give us the broader context to what we're talking about here.
Absolutely. So obviously this is one of the most prized jobs on Wall Street. You know, the head of the biggest bank in America, and filling the shoes of Jamie Dimon, who, you know, has been a bit of a rock star in banking, and everybody has turned to him for his opinion on everything, you know, banking and outside as well. And in the context of gender diversity, you know, US banks and the financial world generally has been very much trying to play catch up there. A Citigroup this year named Jane Fraser as its first female CEO. And so if one of these women did take over at JP Morgan, to have a woman leading America's biggest bank would be quite a big and bold move. But perhaps it's about time.
Thanks very much, Nabila. Good to speak to you. Thanks for bringing us the story. Bloomberg's Asia finance reporter Nabila Ahmed joining us there from Sydney. Interesting strategy in terms of finding a replacement for leadership at a bank. Also, certainly worth considering. 8:26 here in London, 9:26 in Paris or Berlin. Coming up on this programme, the UK has taken a major step towards easing lockdown restrictions this week. What does the future hold then for retail? We will speak to one of the kings of the retail industry. It's that pun again. Our interview with former Sainsbury's Chief Executive Justin King. That conversation...
With border closures and the complexities of COVID, it became apparent that if we could provide it, it would benefit trainees of anaesthesia in the state.
I certainly feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into Wednesday's trading session. European equity markets moving to the downside, a little bit volatile this morning. We were down more than 1%, then paired those losses, now down by more than 1% again, as you see there, down by 1.06% on the Stock 600 this Wednesday morning. US futures also looking more negative, so Nasdaq futures down by another 1%. This after we saw quite substantial losses towards the latter part of the day for US equity markets, or at least more substantial than they'd been in the earlier part. Let's look at things from a sector perspective here in Europe then. No sectors in positive territory, all in the red. Telecoms and real estate plays a slightly more robust role, so those sort of bond proxy, less volatile more defensive sectors playing that kind of role, losing the least today. We see basic resources and technology and travel and leisure and energy stocks moving lower. We haven't mentioned weaker energy prices today. 67.93 is where we trade on Brent, down another 1%. Progress being talked about with regards to Iran, and all of that could add up to some weaker energy prices, and so as a result we're seeing Brent a little softer, 67.93 as I mentioned. So that's a quick look at where we are on the European equity markets. Now, the UK took a big step out of lockdown this week, with households now being allowed to mix and people able to drink and dine indoors. But how has the pandemic and subsequent lockdowns affected the future of retail? Our next guest spent many years running one of the country's largest supermarkets. Since leaving Sainsbury's in 2014, he took up a role as vice chairman of Terra Firma Private Equity and as a non-executive director at Marks & Spencer. He now has a new venture. He's joined the board of Snappy Group.
এবার ফিলিস্তিনিদের পাশে দাঁড়ালেন বাংলাদেশ জাতীয় ক্রিকেট দলের তারকা মুশফিকুর রহিম। করেছে ফিলিস্তিনিদের সাথে। এবার সেই তালিকায় যুক্ত হলেন বাংলাদেশের অন্যতম সেরা ব্যাটসম্যান মুশফিকুর রহিম। গাজায় ইসরায়েলিদের বর্বর হামলার শিকার হওয়া ফিলিস্তিনিদের সাথে সংহতি প্রকাশ করেছেন মুশফিক। সামাজিক যোগাযোগ মাধ্যমে মুশফিক ফিলিস্তিনের পতাকার ছবি পোস্ট করে লিখেছেন, ফিলিস্তিনিদের পাশে দাঁড়াচ্ছি, শক্ত থেকো ফিলিস্তিন।
Supermarkets that, of course, were something of a haven during those lockdown periods, or will those new consumer behaviours be a bit sticky? We kind of got used to buying everything in one place.
Well, a bit of both, I suspect. I think in a way it's wrong to be talking about the pandemic as if it's behind us. I think we're still mid-pandemic, and so we're not going to see which behaviours stick in the longer term for a good while yet. But supermarkets over the last 18 months or so have had great top-line growth, but that's been matched with significant cost growth in terms of the changes they've had to make to cope with the pandemic. So the challenge for them, actually, as they annualise those great sales figures, is how they remove excess cost from their P&L, because they're not going to enjoy the kind of bumper top-line figures that they have in recent times.
Yes, so they had to invest, well, they had to spend on anti-COVID infection measures, as you mentioned there, Justin. They also had to invest in online capacity. And I wonder if any of them will have over-invested there, or if you think that is going to be one bit of consumer behaviour that is sticky, that those consumers who've moved online will stay